Morning, everybody. September 9th, 2024. You can see we're gapping up on the day. So I think the first target or the first question, let me just adjust my screen a little bit. First question everyone's going to be asking is roughly around this measured move and is, well, that's, I guess, where we opened, is basically at the measured move up of the trading range. And it'll be interesting to see if we get back into the trading range and force some sort of trading range day. Remember, yesterday was basically a big bear trend day. So you have to keep in mind that there's 2 hours of sideways to up trading most likely today. We did go sideways for a lot of the afternoon yesterday. So it's a little bit less necessary than it normally would be to get those 2 hours of sideways to up trading. However, it's probably still a little bit bullish. You have to keep in mind when we're talking about the daily chart that this was probably going to end up being a leg in the trading range. And it's not surprising we have a disappointment bar here. Granted, if we do get above the prior day's high today, then we're probably going to end up finding sellers. You also have to keep in mind yesterday was a really large day, and today we're opening basically around the midpoint. I don't know if it's the actual midpoint. We'll check in a second. Hold on. It is important. One second. Pulling it up. So yesterday's midpoint is around right here, or it is right here, which is at the bar 19 high, which is not really a surprise. So there's a couple of basically resistance areas in here. So keep in mind today that the bar 19 high is probably going to end up being resistance when we get up there. And again, because it's the top of the bear channel, right? We got a spike, a pullback, and then a bear channel into a trading range. So the top of the channel is usually the top of the trading range. So that's one reason why it's resistance. The other reason why it's resistance would be that it's the midpoint of this whole thing. Right, I'm gonna look at the 15-minute chart real quick and pull up the hourly chart for a second. So the hourly chart, you can see we had a bull micro channel and it ended up being 3 pushes. So 1 pullback, 2 pullback, 3. However, we didn't trade below another bar. So we had a bull micro channel for 13 straight bars. So 13 hours without trading below another bar on the hourly chart. So we're breaking out above that. The bulls want the breakout above to succeed and get a measured move up, maybe somewhere up here. It's an aggressive measured move from this low to this high. It's the most aggressive. The least aggressive measured move would be probably something like this. As far as wedge measured moves go on the open. 1 second. So that's what the bulls want. However, I think that the bears, this is 3 pushes up, so this might go a little bit more sideways. It's not as likely that we start off with a strong bull trend early today. And you can see on the daily chart that has, 1 second. On this daily chart, the extended hours one, I like to use the extended hours one sometime, getting a bull bar closing near its high so far. So the bulls want this to close on its high and for this to be a bear trap and that we get a rally. Is it likely that that happens? Well, I don't know if it's likely if it closes on its high, but if it does close on its high, it's probably going to end up being a minor reversal. You have to expect that this is going to be strong enough for a second leg down. The first target for the bulls is going to be the high of 9.6, the sell climax high. So basically yesterday's high, which is right around the moving average as well, 55.32.5. And after that, I would say that the low of 830 is going to be support. So you can see this whole thing may have just been a vacuum test of this gap. It's still strong enough for a second leg sideways to down, but you can see we just basically sold off into this gap because it's a trading range and gaps close in trading ranges. So you have to figure that the bears who sold above here and were willing to scale in higher, we're going to end up making money. It's also very possible that the bulls who buy below the 830 low are going to end up making money. So we might end up, we're eventually going to get back, eventually going to get back up into this area. It's also possible that we're forming some sort of triangle, something like that. So we might have to go a little more sideways for a bit. So that's important. And just for, I don't know if I pulled up the 15-minute chart. Let's look quickly at the 15-minute chart. So obviously, it's just a reflection of the hourly. We have a tight bull channel all the way up, and it's going to get a second leg, but this might not be enough of a pullback to correct this. You got to keep in mind, pullbacks of tight channels or wedges in general should be about half the number of bars of the thing in general, or the channel. So you have a 55 bar channel and a 4 bar correction. That doesn't really make a lot of sense. If we have a 55 bar channel, I'm probably expecting, a 20 to 25 bar correction, something along those lines. So bar one, a bull bar closing near its high, 20% chance it's the low or the high of the day. Once we trade above it, it will be 20% chance it's the low of the day. And if we trade below it, it would just be 20% chance it's the high of the day. Because it obviously cannot be both. So what is it for the bulls? Well, the bulls see a big gap up. Obviously, they have a big gap up. And they both see bar one as follow through. So good for the bulls. They're hoping we end up getting basically a bull trend from the open. But I'm not really that convinced by bar one. There's a tail on the top, and bulls were more interested in buying a pullback. If you're hoping that it's going to be a bull trend from the open, you probably want to bar more like bar one yesterday. But even then, if we got that, I don't think it would really increase the chances very much of a bull trend from the open. Probably a little bit, but not all that much, because the reality is, the context is not all that great. We're gapping up into an area of resistance, so not really all that excellent for anybody here. We traded above the Globex high. You can see Globex low, Globex high, and we just broke above the Globex high. So 90% chance on any given day that you're going to trade above the Globex high or Globex low. And when we opened today, we were basically at the Globex high. We were basically a point away. So when the day starts, probably 95% chance that we're going to trade above the Globex high instead of the Globex low. So we are probably not going to have a big bear trend, because if we do, it probably will not reach all the way back down here. You can see this is actually a great example of final flag on the 5-minute chart. You can see this whole thing, we had a bear spike, pullback, and then a channel, and then essentially a tight trading range, which ended up becoming the final bear flag. We got a breakout attempt below, and then a reversal back up. When you get this reversal back up, odds are you're going to test back into the midpoint of the final flag, at least, and possibly even high. You can see when we got back to that high, we got the big breakout here, and then tested back. So here's the breakout high right here. Just draw a little line. So that's the high of the trading range, right? You can see right here. And we got a breakout above it, and then we tested back to it. And we may have touched it or gone one tick below it, something in here. But either way, bulls were pretty clearly bought the retest is what you need to know. And then we ended up getting a rally. So what do the bears hope? Well, the bears hope that bar one that the gap up in bar one is a bull trap. And they want bar two to be a bear bar closing near its low. If it is, they want to be able to potentially sell it for a swing down. However, I'm not really willing to sell below bar two. What am I looking for? Well, either a weak rally to a wedge top or a double top, or a weak sell-off to a wedge bottom or a double bottom. Anything like that would be acceptable. I'm still willing to buy. It's possible we have to get into this gap right here. So we might have to get up into this area, because you can see, this is a doji bar, so it's not like it's smart to buy below bar 10, but theoretically the bull's buying below bar 10 with an extremely, extremely wide stop who are willing to scale in should be able to make money. So you just have to think of, the way to think of these gaps is not the actual, as a trader, you would buy below bar 10. You're never going to do that. But some institutions are going to do that because they're just betting against a big bear trend. And obviously they end up getting the big bear trend, but those institutions, they're multi-billion-dollar corporations trading 1, 2, 3 Emini contracts. So they don't really care if it goes against them, 100 points, it's $5,000. But when you're a multi-billion-dollar corporation, it's not even a drop in the bucket. So what they'll do is they'll buy below here, and then they'll buy more, 10 points lower, 20 points lower, 50 points lower. And then when you're willing to scale in 50 times, and you take one contract and it goes against you, and you're willing to scale in here, scale in here, scale in here, maybe they buy more above every single bull bar. So they buy initially here, they add more here. Maybe they use the midpoint and exit at break even. Some institutions will do that. Maybe they'll buy more here. Maybe they'll buy more, here, buy more here, buy more here. And eventually it's going to rally back up to around their entry price. So they're going to make a profit on most of these contracts and get it around break even on the first one. So bar two, disappointment. The bulls are hoping that we have gap up in bar one, and bar two is a pullback. So we spike pullback, and we're going to start the channel up. So even if you're going to get a bull trend from the open, you probably want to see bars 1 through 5 as the spike. It's not unusual to see bars 1 and 2 as strong bull bars and then get a big reversal, or bars 1 and 2 as strong bear bars and then get a big reversal. It is a little bit more unusual to see 3 straight good looking bars and then get a reversal. Again, it's still common, sell climax on the open, buy climax on the open, but usually if bars 1 through 3, I remember a couple of days in the past where you end up getting basically the first. I remember one particular day. I traded it. I was paper trading at the time, and I was trading a pass day with my friend. We used to trade on the phone basically every day for years, probably like 2 years. And then, anyways, I remember we traded this paper day once, and basically the first like 8. I don't recall what day it was. I think it was sometime in 2018 or something like that. But we paper traded this day, and like the first 6 to 7 bull bars, or first to 6 to 7 bars, looked basically like bar one yesterday. It just went straight up, and it was a gap up as well. So it wasn't like it was a big gap down. The market was way oversold, and we rallied. I do remember another day like that. However, this was a bit different. It was just a gap up and a big bull bar closing near its high, and then we got basically 5 or 6 of those. So I thought that was pretty interesting. So bar one, anyways, bull bar. Bears are hoping bull trap, so they're hoping that 2 is the high of the day, but it's a doji bar. So bulls want spike, pullback channel. Some bulls, disappointed too, are selling out of their longs, and that's part of what's causing 3. If you bought above 1, you were hoping 2 was a huge bull bar, and instead you got a disappointing doji bar. So a lot of traders disappointed. Some might be scaling in. You can see the 50% pullback of bar 1 is right around the open of the day. So probably some buyers here. It's a minor support area. Bears, if they can get a strong bear bar on 3 closing near its low, that would be good for the Bears and increase the chances that they have seen the high of the day. But they're going to need a lot of strong follow through. So what do I think is going to happen here? I don't know. I think it's going to be relatively disappointing for both sides. I'm not that eager to do anything yet. Do I think bar 1 is the low of the day? No, not really. Yeah, I don't think the odds have increased much from 20%. It's probably still pretty similar to 20% chance that that is the low of the day. Bar 3, a bear bar, but the tail on the bottom. So, is this an enticing short for the Bears? No, it's just kind of an iffy sideways bar. So I don't think anyone is really all that interested in shorting below bar 3. There's probably more buyers below 3 scaling in, and they'll scale in lower below bar 1. Again, the bulls are hoping spike up, gap, bar 1, pull back 2, 3, and they want 4 to be a bull bar closing near a high. That would increase the chances that we're going to start a bull channel and that we've seen a high of the day. However, do I think that that's likely? No, not really. I think it's probably going to be a little bit more sideways here. So for me, I'm probably just going to wait and see what happens. If 4 and 5 are strong bear bars closing near their lows, maybe we're going to get back into yesterday's trading range. But I don't know. We'll have to see. Not much to do here. So if we continue down for a couple of legs, like say 4 is a bear bar, and then, I use the word controlled. This is not a controlled sell-off. This is parabolic. It's climactic. By controlled sell-off, I mean, something like this, where it's not really that great of bear bars and you're getting bull bars as well. So if we have some sort of controlled sell-off for a couple of legs and then a bull bar closing near its high around the moving average, I think that would be a very credible buy. But we're just, there's not much to do. This is one of those times where if we got an early good looking bear setup, then you would look to short after this gap up. And if we got, but we're not going to get, a good looking bull setup on the second bar of the day or the third bar of the day or the fourth bar of the day after, a large gap up like this, especially when we're getting bad follow through. So this is, if you're buying up here, you're paying a well above average price. The moving average is the average price. And, as far as moving averages go, this is the 20, I don't even remember which moving average is. I've just had it on there for so long. Yeah, it's the 20 bar exponential moving average. And I think it's less important what moving average you use. I think it's more important that you learn how that moving average functions. For example, like for me, I have been watching this moving average and only this moving average for years. So I am very used to the way the market functions around the moving average. I know how it, how it uses it as magnets at certain times. So I have a very deep understanding of the 20 exponential moving average. If you put a 100 bar moving average on here, I wouldn't know how to, I wouldn't be able to interpret it all that well. For fun, I'll just do it. But so So this, yeah, for me, I look at this and I don't understand how to use this. I don't have a deep understanding of how the market moves around this moving average. It doesn't really, if we go back down to it here, I don't know if it's going to be strong support. For the 20 exponential moving average, if we go back down to it, I know it's going to be support because this is the type of context in which this moving average is support. This moving average, I have no idea. So you can see we basically sold right through it here, and so I just don't understand it. So I think it's less important what moving average you use or whatever you use, and it's more important you learn how those things function. So there's no such thing as like an indicator that's going to just consistently make you money because if there was, everyone would use it, and it would quickly become the edge would disappear. So I think that if you're looking at this, it's pretty clear that the what was I going to say? Oh, right. So basically, my main point is, the tools that you use to trade, like volume, for example. There's plenty of traders who are really good who have a very heavy, you know, they rely on volume the way I rely on price action, and they don't look at price action the same way I do. They're more interested in volume. If I pull volume up on a chart, I don't know what to do with that information. I know what to do with this information. If bar four is a bull bar closing near its high, if the or a higher high, or sorry, a higher low double bottom, and it's possible low of the day. Maybe we're starting a bear channel or a bull channel. But if I pull up a volume chart, I don't know what that means. I don't know what it does for me. I remember I read a book on volume. Like this was years ago. This was before I discovered Al. I traded for about like I don't know 8, 9 months before I discovered Al. But I remember I read a book on volume, and it was an interesting book. And the guy was basically talking about wedges within volume and things like that. Again, it was an interesting book. I don't regret reading it. But I just, I remember trying to understand volume, and then Al basically said, I don't care about volume, and I thought Al was, probably the smartest, well, definitely the smartest trader I'd ever, read a book about, and so I just basically took his advice, and I haven't looked at volume in 4 years. So, anyways, bar four, a doji bar, bar two, and bar four are doji bars. So, to me, I think that we're probably going to end up being a little bit more in a trading range. Had bar four been a bull bar closing on its high, it would have increased the chances for the bulls that we were going to get a spike, pullback, bull channel. It's still possible here. We might be forming a triangle, something like this. So it's still possible that we end up getting a big swing up here. If bar five could close on its high, it would increase the chances of that. However, we're only 1 minute into bar five. There's still 4 minutes left in the bar, and it's already the same size as the rest of the bars on the chart. So it's already an average size bar, and we're only a minute in. So either this is going to go up for the next 4 minutes, pretty unlikely. It's going to stay on its high for the next 4 minutes, still pretty unlikely. Or there's going to be a lot of sell-offs within the bar, and it'll probably close around its midpoint or in its lower third, a little bit more likely, I think. So you can see we traded above the bar one high. It's a weak bull channel, right? So we have a higher high two, a higher high five. So technically bull trend, and higher low on four from one. So really, really weak bull channel, but still a bull channel. You have to keep that in mind. We are always in long. So if I'm going to sell, I'm looking to sell as the market flips to always in short. Five is a big bear bar closing near its low. It's a possible high of the day, but I think too much of a tight trading range for me to want to sell. So if you were selling five, if it closed on its low, you'd be selling the low of a tight trading range that we have from bar two to bar four. So again, what's the magnet for the bulls? I think up in this this gap. It's possibly the magnet. Might be where we're trying to get to. If bar five closes on its high, it's probably a credible swing trade, but you can't do that for a scalp. You're so far above the moving average too that I'm probably just going to sit out. I'd be surprised if this continued to get stronger when we're this far above the average price. I think before I went on that rant about moving averages, but my main point that I was actually trying to make before I got a little sidetracked was that when you're this, if you're buying up here, you're paying a far above average price. So the average price currently, according to the moving average that I use, is 54.40, roughly 54.38, and we're at 54.66. So you're paying 26 points above average. If you're paying 26 points above average, you want well above average price action. And you have to ask yourself, is bars 1 through 5 so far well above average price action? No, it's pretty average price action. So that's something you have to think about. So far, I think relatively disappointing for both sides. Again, big tails on 4, tail on 5. What if 6 is a bear bar closing near its low? If it's a reversal bar, something like bar 13 yesterday, a smaller version of bar 13 yesterday, I think that would be credible for a sell, for a swing. Yeah, I would probably take that for a swing if it's some sort of bear reversal bar. So if we fail, so there you go, we just traded below or above bar 5 on bar 6. And if bar 6 can be, a bear bar closing relatively near its low, I think I'll probably take it for a swing. But it's definitely a swing. Just basically taking a chance that we get back to the average price. Maybe it's some sort of double top with the bar 19 high yesterday, something like that. It does need to be a basically perfect bar for me, but I think it's going to be reasonable if it is. You could argue that it's a lower, or sorry, a higher high double top with 2, or a double top with 18. We should get a few legs sideways to down. Needs to be a really good bar for me. But it would be a credible opening swing, possible high of the day, or at least a high for the next couple of hours. If we do go down, I don't think it's going to be, you know, a massive, massive sell off. I don't think it's going to look like yesterday. Keep in mind, let's look at if you think about the hourly chart, or just pull it up. Is the hourly chart maybe always in long? Maybe, but we're still getting lower highs and lower lows, and obviously we got a climactic breakup below the bear channel, and we're getting a reversal back up. But this is the top of the channel, like I mentioned, that resistance area. So, the point being, this is probably still the dominant force. We might have to go a little bit higher, but the bull micro channel, while it's doing a good job for the bulls, the market has not forgotten about how strong the bear move was earlier in the day. If it's a really, really small bar, if it's like 3 points, I'll probably use a wider stop, like a measured move up. Sometimes when you get these really, really small signal bars, the market will instantly go out, it'll trade down, trigger your price. It'll instantly go outside up by a tick or two and then reverse back down. So when you get the really, really small signal bars, you do have to keep that in mind. So alternatively, what if 6 closes on its high? Well, it would be always long. It is always long still, so you have to keep that in mind. But I'm not really interested in buying here. I think we need to get closer to the average price before I would consider buying. If this is a relatively big bull bar, let's say it closes around 54.75. So let's say it's a bigger bull bar. It gets really large in the last minute, and then we get a bear bar closing near its low. That would be a credible sell for a bull trap. If this is going to turn into a big bull trend, I'm going to need open gaps. But when we're this far above the average price, it's really difficult to want to do anything. So still always in long, but again, if it closes on a tie, it'd be the first bull bar closing on a tie so far today, and we're still 30 points above the average price. So it's not worth doing anything here. I don't think this is going to become a bear bar, but I'm ready if it is. Yeah, so not really worth doing anything. Bears, it's a low two on the open, low one below bar two, and a low two short below bar six, but it's a bull bar. I don't want to sell below a bull bar. Probably better to just wait and see what happens here. If seven is a big bear bar closing near its low, can you sell it? Yeah, I mean it's probably a potential high of the day, but I know that then you're getting into the big bar, big risk talk, so that makes things a little bit more difficult. So not much to do. Low two short on the open for the Bears, but there's probably more buyers below than there are sellers. You buy below six? Probably not. It's a second reversal down. Maybe if you're willing to scale in, but I don't think that's an optimal limit order trade. Obviously, again, like I said, there are some algorithms that definitely will buy below six, and they have really, really wide stops. But for me, I don't think that it's all that great of an idea. So bar seven, again, there's really just a lack of momentum to the upside so far. I mean, the Bulls, we're going to need to get stronger here if you're going to want to buy. You can see we have a tail on five and a tail on six. So, we have a tail on four as well. So maybe it's some sort of micro wedge on a smaller time frame, which would contribute to a bear bar closing near its low being a credible sell. And if bar seven closes on its high, I think it's one of those times where you're getting a breakout above a channel and it's really possibly a trap. So, it'd be better for the Bulls if seven is an inside bar, but it might not end up being one. So if it grows a couple of points, then I think it's a very, very possible trap. So you have to keep that in mind. What if it's bear bar closing near its low? Um, I really would have preferred six to be the bear bar closing near its low. Probably not worth doing anything. If it's a perfect close, it's maybe a swing trade. You always trade small. Okay, well, nothing, right? So disappointing for everybody. Five, six, seven tails on the top, so a possible wedge top. What if eight is a big bear bar closing near its low? Again, a possible high of the day, but less traders will sell after four straight bull closes. So probably buyers below scaling and lower. Sometimes, eight here will go outside up, at least initially, because the bulls were buying. There's a lot of bulls wanting to buy below seven to get after four straight bull bars. They're willing to scale in, of course, because we're far above the average price, but a lot of traders are willing to take that buy and scale in. You see, we have a small open gap with the four high and the six low. Probably sellers above 7, I think, if we could get there. So bulls buying below 6 or below 7, they're probably just scalping. So they buy below, they're trying to make maybe, 5 points is definitely an acceptable scalp. Maybe even a little bit less is probably fine. It's 5 point scalp. Yeah, I mean, I don't know. You can scalp for 4 points here. Scalping, scalping sizes gets weird. You have to really judge the size of the day and think about that a lot. And you also need to look at credible scalps and see how much traders are scalping for in general. So I don't know how far from the one high did traders buy. Okay, 7 or 8 points. Not as useful. What about below bar 2? 4 points. Okay, so maybe 4 points is an acceptable scalp. So let's see below the low, right? How far above are there going to be sellers? So far 3 points, but we didn't go down. We're still working, thinking about this trade. So maybe it's 4 points. If eight flips the market to always in short, I might take it for a swing, but it's going to need to be convincing. I think that unless it's a pretty convincing bar, this is not big enough for me. I think it needs to clearly flip the market to always in short. Even then, it's probably still not excellent, but I think it's credible. And you have to keep in mind that after 4 straight bull bars, we're probably going to get a lower high. So, or a lower high if this is a big bear bar. So let's say that 8 is big bear bar closing near its low, and I take the short. I'm shorting under the reality that we're probably going to pull back first. So we still have an open gap with the 4 high and the 6 low. Nothing really worth doing yet today. Again, unless you're a limit order scalper buying below 7, and I'm interested in how many points the traders are going to make. How quickly will they take profits? I think they'll make 4 points. 5 is questionable. So there you go. They just made 4 points. Yep. So they just made 4. So they might end up making 5 here. We'll see. It seems like some of them are selling out. Some traders took the 4 points. It's just not a very bullish area. Again, 4 straight bull closes, yeah, but so many tails. It's not worth doing it. 8, I think, could be a trap. It's a high one for the bulls outside of. It's a breakout. So the bulls, they see a breakout above the bar 7 high, and they're hoping for a bull bar closing near its high. The bears, they saw a low 2 short on bar 7, which has failed, but anyone taking that low 2 short is scaling in on the premise that this is not the start of a strong bull trend. So any algorithm that's selling this, it's not a good sell, but you have to keep in mind that something to think about is every single bar there are buyers below and sellers below. So like every single bar, there are traders doing everything for every conceivable reason. So there are algorithms that are profitable that are selling below 7. So you have to put yourself in that headspace of, if I sold below 7, where is my stop? How could I possibly manage this trade profitably? And I think the thing is, it's same kind of deal as buying below here. If you're selling below 7, your stop's probably at least above yesterday's high. Um, it probably doesn't need to be, but I'm just thinking of as an algorithm. If you're selling, you're just basically selling, hoping it's not a big bull trend day. So it seems like we might be trying to make it to the bar 10 low. Again, this has not been a great rally. This is just hard to get in on. So this looks like a vacuum test, and I think it's a vacuum test of the bar 10 low. We're only 43 seconds into the bar, so it just looks like a climactic breakout above a channel to me. This whole thing was a triangle, right? So when you get a triangle in general, pretty 50-50 chance. Well, you can draw it as a triangle. I'm thinking of this more as a triangle. more like this. So we touched the 10 low. What if this becomes a bear reversal bar? Probably not worth selling. If we get like a 2-bar reversal here, maybe you could take it. What you really want to see is, the next bar be a small bear reversal bar if you want to short. It's a third reversal down too, so you have to keep in mind reversal down below 2, reversal down below 7, and if 9 is a bear bar closing near its low, it's probably credible, but it's going to obviously depend a lot on how it looks, how this bar looks. So context is obviously very important. But I'm not really willing to buy up here. I don't think buying the close of bar 5, 6, 7, or 8 is a winning strategy. I don't think buying above 1 is really a winning strategy. So for me, I'm totally okay with having been flat, and I'm certainly not going to buy the close of 8. So we're selling off, and I guess it's not surprising because obviously this ended up being the magnet or the target. Um, the question becomes, where do we go from here? And if I'm going to sell, I want some sort of bull trap. We have a lot of straight bull bars, bars 4 through well 8 so far, but possibly 4 through 9 are bull bars, and all the reversals down have had basically no stop order bears made any money today. So that's something to consider. Only stop order bulls are making money. Limit order bears have made some money today. They sold above the high of the day. Maybe they were able to scalp out, and it'll be interesting to see. So let's say bar 9 closes on its high, and we never get back to the bar 8 high. Well, that could be the start of a bull trend day. We have an open gap with the 4 high and 6 low. I don't mind. I don't really care if this closes on its high, because if the next bar is again a bear reversal bar, it's a possible high of the day. I'm not really interested in buying. This is not, for me, something I want to buy. I don't want to pay far above average for this kind of price action. So if this just ends up, continuing up in this fashion, then I'll just let it go. Learning to just let the market go without you is a really difficult thing to learn how to do, but it's really important, because what you'll find is a lot of times you do just let the market go without you, and a lot of times the market, you say you'll just let it go without you, and then it doesn't, it reverses. So you'll end up saving yourself a lot of money if you're just okay with letting the market go without you, but it obviously takes a lot of time to be okay at doing that. Okay, so 9, I think that's a pretty disappointing bar for the bulls. What do I need to short here? A good looking bear reversal bar. I'll know it when I see it, but a small version of 20. It's hard to want to short though after so many bull bars, but we are pretty far above the average price. So far, again, not a ton of momentum for the bulls. You now have an open gap with the bar 8 low and the bar 10 high. So you do have to keep that in mind. Or sorry, the bar 8 low and the bar 10 low. So obviously it's dependent on how this closes and stuff, but that is currently an open gap. Kind of hard to want to take any shorts. We do have 2 open gaps: the bar 4 high and the bar 6 low. Now we have an open gap: the bar 8 high and the bar 10 low. So 9 looks climactic, and a lot of times in small pullback bull trends, the market will look like it's going to reverse constantly and just never does. So I think if bar 10 closes on its high, that will be a difference maker for the bulls. If it does, I might buy small. and just see basically if we start to get a small pullback full trend, but it doesn't look like it's gonna. So now this is becoming a pretty large bar, which makes it difficult. So the thing is, if you're selling this bar 10, your risk is big. It needs to close on its low, but your risk is large. So probably have to sell small and look to scale in. If 10 had closed on its low, I was going to sell a piece of the position size that I wanted and then add on around a 50% pullback. But 10 is not a credible short. It's not just not reliable enough. So I think 10 destroys, well, quote unquote destroys, reduces the chances of a bull trend day. I thought it was possible we get a bull trend day if 10 had been a good looking bull bar and we kept the gap open with the 8 high and the 10 low. However, we are not able to do that. And are we always in long? Yeah, but 10 is really not great. So maybe just look for some sort of double top. Maybe we get one more leg up and one more new high and a wedge, 1, 9, and maybe like 15 or 16 or something. So the whole move up on the open was just the bulls basically slowly getting closer to the bar 10 low. The bears were trying to keep the gap open and they were selling on the way up, but the bulls, the bears were just, they kept getting a bull close, bull close, bull close. So eventually they gave up. Some bears bought back shorts and bulls bought for a scalp to the bar 10 low, and that's why traders exited there, and that's why we ended up reversing back down there. Can you sell on a limit? Could have you sold on a limit order at the bar 10 low? I don't know, maybe. I mean, I wouldn't, but someone smarter than me probably did. And if 10 closes on its, or if um, bar 9 closes on its high and you get a follow through bar, then you just exit. I suppose that's how you would manage that limit order trade if you were to take it. So what if 11 closes on its low? I think if 11 closes on its low, we're probably going to get a higher or a lower high. So if 11 closes on its low, some traders will sell expecting a second leg down and a lower high. Other traders, they see 10 and 11, and they say, okay, well, again, this is all presuming it closes on its low. So yeah, but the risk is kind of big, and they look to sell above 11 rather than below 11. It's probably going to be fine to sell below 11 if it closes on its low. Just basically betting on a second leg. It's going to get a second leg, but I think the optimal entry would probably be below bar 11. And then, for, I don't know, some sort of something, scalp, maybe swing. Okay. But so this is, the market does this sometimes. The bars just end up getting bigger than you'd like them to be. So is this going to get a second leg? Yes, it is. But are we going to pull back first? We might have to. So 9 was your sell signal bar, and that's your possible high of the day. So I'm still looking to short. I'm just looking to sell higher. I want to pull back and then to sell around maybe bar 16. I would love to see a pullback here for the next 4 or 5 bars and then take a short around bar 16. We might not be so lucky. We might just get another bear bar here. That does happen sometimes, but the first reversal up is going to end up being minor here. Do I think we've seen the high of the day? Feels pretty 50-50 to me. So we might just end up going down, and it's difficult to do anything. You could have sold the close. You could sell the close of 11 and just hope for a second leg down. You're going to get one, very likely. But for me, I don't know. Probably just wait. It's okay to be short. I think we're always in short. I think 11 made the market always in short. I would really prefer to sell a pullback. So any short that I take over the next 5 to 7 bars, my premise is going to be that, you know, we've seen the high of the day. Some traders might be more interested in selling a 50% pullback. Bulls are hoping one of two things. Either they have their bull spike, right? And this is the channel. And now we're going to enter a trading range. And they're hoping the trading range becomes a bull flag. And then we get a reversal back up. And the bears, they want basically a lower high and possible major trend reversal. They're hoping this whole move up is a bear flag from the sell-off down to the low on Friday. So that's possible as well. So I think a lot of people want to sell a pullback. That's why we might not get one. The low one short. I sold. I'm just going to sell small. I'm going to sit through a pullback. Like basically inevitable. I'm sitting through a pullback. So I expect 13 to be disappointing for me. Well, I'm just adjusting my stop loss. Just give me a second. So where do I want the market to go to? Well, it kind of depends on the price action. So my profit target isn't set in stone right now. Some traders sell. They make maybe if they get 10 points, they'll exit. I think this area is kind of interesting because we might have to test back into the trading range. So maybe if we get to the bar 47 high, yeah, maybe I'll exit there. So let's talk about math. 1 second. Just adjusting my profit target. Okay, so currently I have stop loss right here, and my profit target is right here. It's a swing trade, and my risk is 17 points, and my reward is 26 points. And I think 50-50 is a reasonable chance that we get there. Will I adjust my profit target? Yeah, I mean it depends on what 13 looks like. 13 so far is a bear bar, so if 13 just stays a big bear bar and closes near its low, especially if it can get below the moving average, then maybe we get a vacuum test down, and I think that would be that would increase the chances that we get the vacuum test is what I basically just meant to say. But I think it's going to be a spike in channel. I don't think we're going to go straight down. So why did I think that 13 was going to be a disappointing bar? Well, it still might be, first off. It's something to keep in mind. But even if it is, we're going to get a lower high. So it's okay to hold. However, if it is disappointing, you might have to adjust. I might have to adjust where, my profit target. I need to go log this trade real quick. That open. Do that later. So, I think especially, Alba, it's not like Al logs his trades anymore, but when you're working on trading, it's important to just think about your trades a lot. So what I would do, I'm trying to find the sheet where I had it all written out. So what I would log my trades is I would write, my entry, obviously where I entered. I would write my position size so I could figure out if I'm trading too big or too small. I would write out my premise of the trade, and I would write out the problem with the trade. So, this is from like early this year, but sell below whatever bar, exit. I got lazy with it, but I was better about it a few years ago. Um, Let me see if I have, but I have consecutive wedges in one here, possible by the close finish. So it's important if you log your trades. It's important to think about the premise, the problem. It's important to think about your risk reward. It's important to think about. I think those are the two main things. I think so. If you're gonna start logging your trades, right? Your position size, your entry, your premise, the problem with it, and then your risk reward and the probability. So what you think the probability is. So if you keep doing all of that stuff, you'll start eventually, seeing trades quicker and thinking of things faster. So 13 looks like a bear bar closing near its low so far. I would just like to see this kind of collapse. To be honest, there's definitely a chance of it. I'm not sure how much of a pullback I want to sit through, but we are in an area where we might bounce. So the close of this bar is really important to me. If it closes kind of disappointing, I might try and scalp with 10 points. I'd like to see it close below the bar one low. Doesn't look like I'm going to get it. So 13 is follow through, but I think it's a little disappointing. The tail and not closing below the bar one low. Very possible that 14 is just a bull bar here. But it's going to get a lower high if you look at this. So there are a couple ways to trade this. I think I'm going to do it the difficult way and just trade always in and just hold through what's probably going to be an annoying pullback. Ready to do it. It's just this can be the not as fun part of swing trading is holding through annoyingly deep pullbacks. I doubt I will lose money on this trade. Doesn't mean I'm going to make a lot of money, but I just doubt I'm going to lose money. The reason for that is that I think we're going to get a lower high from 10 through 13. And if we do get a lower high from 10 through 13, it's very possible that, that we A, get a swing down, or B, get some sort of, second leg that allows me out before it gets a big reversal. So I think, obviously is the chance I get stopped out. There's always a chance you get stopped out until you exit the trade. But I think it's possible that I end up just getting out around break even. Very possible. But I think the first reversal up is going to be minor. So I'm just going to hold. Bulls want a lower low double bottom, 1, and 14. I think we're going to touch the moving average. We didn't touch the moving average on 13. So maybe we get a reversal up for like 5 to 6 bars and then a reversal back down on bar 18. If we do get a reversal back down on bar 18, I might add to my position size depending if I can move my stop. So my stop is currently wide. It's up here. So I'm trading small. But if we get, let's say, we go pretty sideways here and then a bear bar closing near its low over here on bar 18, or maybe it's closing somewhere over here, then you can sell for a second leg down. So I might add to the position then if I can move my stop and my risk is massively reduced. So nothing for me to do. I would love it if we would just get a vacuum test down of the bar 47 high from yesterday and 48 high from yesterday. That'd be cool. But I think if we were going to do that, bar 13 would have closed on its low below the moving average and below the one. Well, below the moving average implies below the one low, but the one low was really important here. Could be, if you think about it, a parabolic wedge on a lower time frame. Let's say that 14 is another inside bar. It's down up to bar 12, and then a pullback, the end of bar 11 and up on bar 12, and then down bar 13, and then a pullback on the tail of 13 and the tail on 14, and then maybe down again bar 15. So maybe some sort of wedge on a lower time frame. Something to consider. So 13, 14. It'd be nice. It'd be really nice if 14 could just close really big bear bar. But I don't know. I don't think we're going to get it. Again, this is one of those times where the market's looking like it can pull back at any moment, but the reversal will probably be minor. Just any bear close would be nice here. It's interesting. The Bears have not been able to make 10 points yet, selling below 12. So it needs to go to 52 flat. So this is where the 10-point profit target would be for the Bears. Some Bears might take it. I think 20 points. So 20 points down here is reasonable. Curious as to exactly how many points I'm going for. So 26. Some traders might take 25, but ultimately, I think if we test down, we're trying to test back into this area and just get basically the whole big thing, this leg and then a pullback, and it's a 30-minute. Let's just look at a 30-minute chart. So 12, 13, 14. So 14, a bear bar, but a doji. So sellers above, yeah, but you probably wanted to see something better. We're always in short, but it might be a bit more of a trading range. Actually, I can just pull up a different chart. Hold on a second. So futures, unhighlight, extended hour trading. Okay. So yeah, and the pullback is large, right? So we got a first pullback here. So possibly, I don't know. Let's see if this is a thing. It's exact. So you can see the first leg down was here, and then we pulled back above this bar, right? We pulled back above the 1030 bar during the 11 o'clock bar. So leg one, pullback, leg two. And the leg two is the exact low. So possible two leg can move and then a pullback, and then we get a second leg down. Doesn't mean we're going to go straight down. Just means we're probably going to get a second leg, which might be starting right now on this lower time frame. So I think a lot of traders are eager to sell, but they want to sell a pullback. And sometimes, again, you just have to bite the bullet, take the sell, and be willing to sit through a pullback and be willing to lose the trade. I sold below 12, very willing to sit through a pullback. And a lot of times when a lot of traders do that, again, you don't end up getting a pullback. So again, I would like to see 50. I think 15 is going to try. So it's gonna attempt to break out below and attempt to get a good looking bear bar here. But I don't know how well it's going to close. So 15 is an important bar. If 15 is a big bear bar, if it gets bigger, then we might just end up getting a vacuum test. Sure, it's going to be. What if it's an inside bull bar? It's probably a minor reversal up. I think we've seen the high of the day. So I am not going to exit. I'm still a little surprised Bears haven't made 10 points. So that's one of the reasons I do think we're going a little bit lower, is that I think Bears should be able to make 10 points. Who sold below 12? Yeah, you could have sold below 10. You could have sold the close of 11, but ultimately 12 was the low one. And it's the most credible, it's the most reliable short out of 10 or 11. So those traders who sell 12 should make money. You could scalp with 10 points. So let's say you took a position size and you're looking at your risk and you think, whoa, this is more than I thought. And it would make sense to scalp a piece with 10 points. But I took a position size where I'm willing to sit through pullbacks. So it's a swing trade for me. I'm not going to scalp any with 10 points. And again, I still think I'm going to sit through a pullback, but I still think we've seen the low of the day, or sorry, the high of the day. So I'm still wondering if we're going to get back to that 47 high. Would really be surprised. I think Bears should get 10 points here before we pull back. But first reversal up should be minor. So 2 legs, maybe 5-10 bars, sideways to up, and then another reversal down would be what you're looking for. Again, the more willing you are to lose trades, the more often you'll find you're winning them. So, for years, I would, even occasionally, I don't really as much anymore, but I'd be so worried about a pullback. I see 15 forming, and I see it starting to get bought up, and I think, oh my God, and I just exit at the market. And then because I don't want to sit through the pullback, I don't want to lose money. And then the bar, the next bar, let's say 16 becomes a big bear bar, and I'm sitting there and I'm like, why did I exit? There was nothing on the chart that was telling me to exit. So that can be Bears should make 10 points here. I think they're about to. I think it has to go like 2 ticks below 15. So 16 is an important bar. But anyways, yeah, if there's no real reason to exit, then just don't exit. It's fine. So considering my stop right now, I think we're now in the territory of I would like a vacuum test. I'd like it pretty soon. 15 closes below the moving average, which is good. And I'd like to see 16 just kind of collapse. It doesn't have to collapse, but basically, I want to keep getting bear bars until we get a collapse. It could be a parabolic wedge. 1, pullback, 2, pullback, 3. So again, 2 leg sideways stop, very possible. Open gap with the bar 11 low and the 14 high. 16 is a bull bar closing near its high. I might just get out. But you can see the exact low is exactly where bears were able to make. Sorry, 1 tick below where bears were able to make 10 points. Some bears are scalping with 10 points, assuming it's a trading range day. And that's a reasonable thing to do. Probably the optimal thing to do. It's possible, like I said, if 16 closes on its high, I might just exit. I was ready to sit through a pull again. It's still going to be just a pullback, and we're going to get a second leg down, and you can sit through all of this stuff. But I think that I want to see the market kind of collapse here. I think 12 is pretty much the only credible opening swing we've had so far today. So that's one of the reasons that I'm thinking we might end up getting 20 points out of it. Maybe a measured move down, bar 9 high, the bar 1 low. This area just seems like a target to me. Remember if I mentioned, I believe I mentioned on the open that for the Bears, they were hoping to get back into this trading range. So that's kind of why, and we were around a measured move up on the open. I think I said that stuff. If I didn't, I was thinking it, but see, that's why there's resistance there. If you look at a 15-minute chart, kind of the same thought process of maybe a parabolic wedge, yeah. But again, this is going to get a second leg down. This is kind of what you're thinking about. We might have to get down to here first. Um, maybe we go to this close. Maybe we close this little gap right here. Is it closed? It might be a small negative gap. Okay, it's exact. So kind of just thinking through my trade here. What about what I want to do? I'm not exiting above 60. I'm just kind of considering if we get back to a 10-point scalp, should I just take it? Um, so I think if we get back to a 10-point scalp, I might just take it. 16 is disappointing. We might get a few legs sideways to up here. 16 is probably a lot more of a swing trade. Definitely can exit, but I'm not gonna. I think it's gonna be a minor reversal. I think if I'm stubborn enough, I'm gonna make 10 points. Let's put it that way. If you bought above 16, you know you're going to sit through a pullback. So we might test back to the 15 close here. If we do, I'll just get out. What if 17 is a bull bar closing near its high? Well, I'll probably exit then. But if we get consecutive bull bars against me here, then I'll probably just get out for probably pretty close to break even or something. I think that we're in a trading range, so even if we end up going a bit lower, the 16 high is going to be a magnet later in the day. Again, is the 16 high a magnet because it's a good buy and traders are buying it? No, but the 16 high is going to be a magnet because it's a bull bar closing near its high, and some traders, mostly algorithms, will buy it and put a stop maybe below yesterday's low and scale in. So that's what makes those magnets. It's not always necessarily reasonable buys. The more reasonable the buy is, the stronger the pull of the magnet. So let's say it's like a really, really solid trade, then that like traders should take, not just algorithms. Then there's an increased chance that you're going to end up testing that magnet. But 16 high, it's not like it's a good buy by any stretch, but it's not unreasonable to buy if you're using a wide stop. So that's something to think about. So when I exit this short, what am I looking for after that? Well, I'm sorry, I'm just checking something. Well, I'm probably looking for a buy later though. Currently, I have a limit order to take profits below bar 16, so it was slightly better than 10 points. Why below bar 16? Because I don't think it was all that great of a buy. So I think the traders who sold below 16 are going to get stopped out. The bulls are hoping that the whole move from 10 to 15 is a bear trap and it's a parabolic wedge, and it is a parabolic wedge on a lower time frame. But you have to ask yourself if that's really where you want to be buying. So I do think 16 is going to get a second leg sideways up. We might trade below 16 before we get the second leg, but it should get a second leg. If you bought above 16 and you're disappointed in 17, are you going to exit around break even? I don't know. I'm kind of conflicted because on the one hand, if you did take the buy, you probably knew what you were getting into. But on the other hand, it's disappointing. But you knew what you were getting into. I mean, you probably expected to sit through a pullback. So probably buyers below 17. If 18 is a bulwark closing near its high somewhere up here, which does happen sometimes, I'll just exit and take a small loss. That's fine. I still think, though, even if that happens, we're going to get a lower high. So not much for me to do. I'm going to pause the video for a few minutes and then get back if I do something, have some management, whatever. So I have kind of an interesting thought. There's an open gap here and an open gap here, which is two open gaps. So hold on. All right. Well, I just got out. But my point is, if those gaps stay open, this could be a small pullback bear trend, and I may have just exited when we might get a small pullback bear trend. So 18 closes on its low. I'll probably sell again and take a chance that we're going to get a bear trend. And that 16 was just trying to trap traders out because those two open gaps are really important. But I made a little bit more than 10 points. Not a lot more, a little bit more. Maybe like 11. Almost exactly 11, actually. So if this is a bear bar closing near its low, I'm probably actually just going to have to re-enter. If it's something disappointing, then cool. I'll just wait. If we get a deeper pullback and then those another bear bar closing near its low, then maybe I could do that. This is looking like I'm gonna have to short it again. I was considering just moving my stop to a relatively close area and then hold on, just give me a second. All right, I just sold the market. So why did I sell the market? Because we have two open gaps, and if the gaps stay open, we might end up getting a small pullback bear trend. Is it possible that we get a big bull bar 19? I think it's borderline probable, but for me, then if we get it, a big bull bar on 19, I'll just exit. But for now, I'm thinking I'm just going to sit and take a chance those gaps stay open, and maybe we get a follow through bar. Maybe we get somewhere into this area. Not sure the risk reward is all that amazing, but I don't know. It's still early enough in the day that could happen. So I'm gonna sell, take a chance, and if we get a bear bull bar closing near its high on 19, I'll probably just exit. I'm gonna pause the video. I'll be back in like 10 minutes. So I exited my short during 19, somewhere in this area. I'm just gonna actually check the. Okay. So I exited during 19 in that general area because 19 is not really what you want to see. You wanted to see 19 collapse, and it was definitely a wedge. So what am I looking for now? Well, I think there's a swing trade left to the day for sure. Question becomes how much lower do we go? I think if we were going to collapse, we'd probably be doing it. Not super sure we're going to go down. I think especially if 20 closes on its high, we're not going down. Bears who sold the close of 18, disappointed 19, might be exiting 20, which would be the optimal exit. Do you buy above 20? I don't think so. Just going to let it form here to log some stuff in my notes. Give me a second. We're still always in short. So, you look at 19 and you think to yourself, is that the bar you want to sell below? No, there's probably buyers below scaling and lower, but the bulls are hoping that the bears are hoping it's the start of the bear channel. And 1920 is just a pullback from 18, which it's possible. But for me, I'm probably just going to let it go without me if it is. I think I made a mistake exiting around during 19. I usually should just be waiting for the bull bar to close on its high and then let it stop me out because the argument of two open gaps is still credible. Now, if 21 is a bull bar closing near its high, I would have just exited anyways, but I think that would have been smarter for me to just hold, wait for a bull bar closing near its high. And I could sell the market right now with the exact same premise and everything. However, I don't want to get myself in trouble and overtrade a little bit. So I am just going to let it go without me. However, I did make a mistake exiting during 19. Should have just held and kept my stop below 18. And if 21 is a bear bull bar closing near its high, then I would exit. So I think I mentioned I gave back about half of what I made on my prior short. So instead of being up 10 or 11 points up today, I'm up like 5, which is fine. But yeah, I definitely did not need to exit during 19. Just panicked out. Which, it's kind of funny because you lose focus for a split second sometimes, and then that ends up happening. But nothing for me to do here. I think I'm just going to wait. Do I think it's going to be a big small pullback bear trend day? I'm not that convinced. We do have the 2 open gaps, which is important. So we are always in short. It's okay to be short and hold short. But I think I'm going to let the bear channel go. And we're early enough in the day, and this isn't super strong, that we might have to test to the bar 48, bar 48 high, and then get some sort of reversal attempt up, if possible. I think the bears really want to see 21 be a good looking bear bar closing near its low. 21's any sort of bull bar, I think it's probably just better to get out because if you think about it, 3 bull bars against you is not what you want in a bear trend. Once you get 3 bars against you, it turns into more of a trading range. You can see over here, bear trend, 2 bars. Really, obviously, special situation, humongous bar, probably a trading range after that. But 1 bar, bear channel, 1 bar, 1 bar, 1, 1, and then 3, and then trading range. So usually if you get a 3rd bar against you, that's a sign that we're probably in more of a trading range. So again, I'm not sure how much lower we're going to go, but I do think we're going to go lower. Might end the video in a minute here. So we're getting a breakup below the bear channel. And I think this is the target for the bears. So I think we're going to get down to here and then try to get some sort of bounce potentially. But all right, I think I'm going to end the video here today. But what am I expecting the rest of the day? Well, I still think there's a swing trade left. I think we're going to bounce. Obviously, I think we're going to bounce. I don't know when, but if we do bounce, you can look for either one of 2 things. You look for either us to start to go sideways and then get a reversal down and a second leg down from this. That's possible, especially if we keep the gaps open. So the reversal up only comes up to here. You get some sort of double top bear flag with 18 and maybe like 30 or something like that. That's possible. Possible we just get a collapse down to the bar 48 high and then start to go sideways. So you can either look for a trend resumption, or if this breakup below fails and we start getting a couple of bull bars, and then like maybe a lower high or a higher low major trend reversal, something like that could be possible as well. So for me, like I said, definitely made a mistake a little bit earlier, but that's okay. It's kind of part of trading. All right, that's it for the day.